Hey, hi everyone. Welcome to Primary Market Chatter, brought to you by Sunday Investing. This is our May first week episode after a long, long time. Just want to make sure am I audible? So, Sachin, Tanmay, Rohit, if you guys can hear me, can you just give me a
Yes,
thumbs up?
loud and clear.
Perfect. Yeah. Thank you so much. We are back after a long time. The last session we had done was 2 weeks back, 2 months back when we had reviewed companies like Gordium when they were coming public. There were no meaningful IPOs or the market for primary markets were bad simply because the secondary markets were struggling. Now that there is some kind of recovery and there are some IPOs we thought we'll try and restart. Again, this is not a perfect restart. We might again just disappear simply because either there are no IPOs or the markets are just so difficult for IPOs that it doesn't make sense to review. But yeah, we'll try and be slightly more no promises as such, but yeah, we'll try and be more active if there are more IPOs. Yeah, with that we can start today's episode. Before we actually get started, I want to highlight a couple of housekeeping news pointers that I always do. One, we are not SEBI registered. हम लोग जो भी बोले none of it is a qualified opinion. Do not take anything on face value. आप अपना study खुद से करें. Only use what we are saying as a additional information, which may or may not be right. A lot of it can also be our opinion. So keep that in mind and only basis that make a decision. Second thing, if you haven't followed our YouTube channel, I have pinned it here. So you will see ऊपर जो pinned comment है ऊपर, that is the YouTube channel for us. Go ahead and follow that. वहाँ पे we post the IPOs that we review. We'll continue to do that here as well. In terms of the order for the day, we'll start with Value360 and then go to Recode, the two SMEs, and then we'll do two main boards. We'll start with either Kissht or Bagmane REIT and do the other one round. Probably start with Bagmane and then cover it, close it with Kissht. It's an interesting week. We have a few choices, so it's going to be interesting week. At least money would be fully utilized. I remember reminiscences of good old time when we used to have like 10, 12 IPOs. This is a after a long time, a week where like two, three, four IPOs are coinciding and quite a few of them are interesting to apply or at least to study. With that, maybe let me start with Value 360. That is what we'll probably start with and set it up. In terms of the company, incorporated in 2009, company is a provider of integrated marketing and PR solutions in India. So it's a IR/PR company, marketing वगैरह करती है. We'll try and understand it in detail. In terms of the IPO, it's a 42 crore IPO, out of which 38 crore is a fresh issue. So market cap 158 crores पे आ रहा है. So 158 crores पे 42 का डाइल्यूशन है. FY25 फाइनेंशियल्स की बात करूं तो 55 crores का टॉप लाइन है एंड 5.7 crores का बॉटम है. बट FY26 पे बात करना चाहिए अब, क्योंकि FY26 भी कंप्लीट ही हो गया है. जस्ट दैट अ लॉट ऑफ कंपनीज राइट नाउ आर कमिंग विद ईदर 6 months or 9 months of numbers and then would release the FY26 numbers soon. But yeah, we should look at what the FY26 financial projections are. In terms of the LM is Horizon Management. So with that, over to you, Tanmay, to talk about Value 360.
I'm audible.
Yeah.
So this should be short, I feel. So Value360 Communications Limited is an integrated marketing and PR public relations firm. They offer wide range of communication services like IR, investor relations, crisis communication, reputation management, digital PR, and campaign management. So basically, they're not a normal kind of I would say PR, no, advertising company or a digital solutions company. What they do is the primary business comes from the IR. Like let's say there is a company which does a lot of business related developments, or there is some quarterly numbers, or there is some investor PPT which has to be made. So these companies like Value360 comes in and do a annual contract or a event based contract and provide services for this either listed or unlisted companies on the investor relations part. And so they have basically two main verticals. First is their Value 360 vertical, in which they see all this IR and kind of a crisis communication kind of a stuff. In the second part, they have a entity called, no, I would say vertical called as Popcorn. So in which they do digital advertisement and content management and all that. They derive revenues from two models. First is the contract based revenues, and second are the retainer kind of a revenue model. So the company has got 180 plus employees. But to name some of their clients, the names would be Maruti, Kia, AB InBev, which is second largest alcohol company, Mansarovar, Cash Karo, and they have all. So they were till FY25 they have completely zero government or PSU led revenue, but in FY26 they should have some, and 27 should be very big for them in terms of government revenue. So they have already have closed a big contract with UP government. So that should have some kind of a revenue in FY26, but 27 should have a very large chunk from that particular contract. Uh, so like largely these are private players, but the revenue bifurcation should shift to some kind of a private public players here on. Talking on the IPO raise, the company is raising about a 42 odd crores, out of which 37.5 crores is a fresh issue, rest 4.5 crore is an offer for sale. From the fresh issue, they are raising 12.7 crore towards working capital. They are doing a capex of 4.65 crores. They are repaying debt of 4.5 crores, and this is an interesting thing. They are investing 7 crores in a company called as Clan Connect, which is into influencer marketing. So I feel they have written it this way that we are looking to increase our stake and then acquire the company. So like as per this statement, it feels they own some kind of a stake in it, and they want to ench it up through this 7 crore of an infusion. Uh, and the rest, about 8 crore, would be a GCP. So the company has also undertaken a pre-IPO round at 54 rupees per share. IPO is now coming at 98 rupees, I guess. This was done in September 2024. There was another small round done in mid of 2025. The investors included, Cube Marketing, Deepak Garg, Savio Pinto, Huma Qureshi, the actress, and Rohit Sharma, cricketer. So all these guys had. So there's a long list of like 30, 40 odd names. I've just highlighted some of those. Uh, Talking on the revenues from FY23 to FY25, the revenues have stayed flat from about that 50 to 55 odd crore, mark. So if I just want to go through that CAGR kind of a thing, it is about a 2.5% ish CAGR in these two financial years. But the EBITDA margins have almost doubled from about 11ish percent to about 22% and the PAT margins are shot up from about 1% to about 11%. So, as you would have already seen, we had interviewed the company, and the interview had just been posted about 3 hours back. So, we had asked the management behind, why are these, by the way, how, like, why were the revenues flat, and second would be why were those margins went up. So, first is what he had said on the internet, and second would be what I felt regarding those margins. The first, what the clarification was key, till FY23 and FY24, we used to have a blend of high quality, or I would say small ticket, high margin, as well as large ticket, low margin, kind of a volume based revenue. So what we have done is we have went from a quantity kind of a revenue to over a quality kind of a revenue. So we have reduced our customers, increased the ticket size, and cut off those low margin kind of a contracts. It's like there were two but main reasons they had said. First is the consolidation of the business. Consolidation doesn't mean any kind of an entire getting acquired, but they were they had done 100% kind of a CAGR growth from about 2019 to FY23, which they were in a phase to just make it stable and then take it to a different path from FY25, which has been already seen in the first 9 months numbers. So 9 months numbers are about a 55 crore, I would say, top line from about 53, 54 crores in FY25, and these are the 10-month numbers. So of course the 2 months should be the incremental revenue over FY25. The margins have inched up, but if I looked on the what expenses have made the difference in the P&L, these would largely be, I would say, 2 3 expenses. First was traveling expenses. So in FY23, the traveling expense another expense it has given in the RHP, so it is nothing I'm saying it from my head, it is written in the RHP. That number about was 4.6 4.7 crores in FY23, the traveling expenses, which have came down to 1.2 crores in FY25. So वो जो बीच का 3.5 करोड़ that has straight went into PAT. Of course, the tax numbers come in, but if I just even if I remove the tax number, it is about a 3 crore kind of impact, which took that PAT from about a crore to now about 10, 11 odd crores. So, मतलब for whole FY26, the number should be 10 to 11 crores if you just do the TTM basis of first 9 or 10 months. So that is one difference. The second I saw was some entertainment expense which went from 80 lakhs to zero. So that made a straight impact. And there were again chota printing stationery ka 5-10 lakh here and there. So I feel the expenses have been controlled, या फिर restricted, either of the which ways has led to that PAT growth. And second, one more thing I just saw, like it is nothing much significant, but the employee benefit expenses haven't shot up even though they have increased their employees. So there has been some, I would say, either cost management or some like efficiencies done there, so that their employee benefit expenses haven't went up. So but I feel FY26 should see, because they have added some two higher leadership position guys and have also increased their employee count. So 26 should see a increase. But obviously, as the revenue has went up, I feel that incremental employee expenses should be tackled. Talking on the valuations, it is coming at about 158 crore MCAP. This year, like what I can see is about 10 and a half crore का PAT आ रहा है on the TTM basis. TTM पे कुछ 9.8 आ रहा है. I expect last quarter to be slightly better. तो approx 10 and a half crore का PAT आना चाहिए. So it is priced at about 15x. So like I feel apple to apple कोई comparison नहीं in the listed markets. uh, like one can like feel ki this company can be acquired apna compared with your digital advertising or your traditional advertising companies, maybe a Yap which listed recently. But I feel the model is quite different, and currently the largest portion comes from those IR services. IR में तो कोई listed है नहीं. And even we had talked in the interview, the company is saying कि यार हमारा जो margins है और जो growth profile, you should compare us with Nad Factor, which is a largest company in the segment. Though those guys operate at maybe 25-30% kind of a PAT. It has a $15 million PAT in FY26 around. So then I had a question for him. Here, that company has got predominantly the IPO related road shows and all IR and PR. So that is a very high margin, 40% PAT business. So are you looking to go into it? So he has clearly said it. So this is on the interview. So this is in a public domain. So you can guys just go through that interview. So we'll also get from where all this info has came in. So the company is also looking to expand into IPO related services and also the healthcare services. So this was something new. So he's saying we have already, so on the both the divisions they have hired someone senior in the healthcare as well as the IPO kind of stuff. So from FY27, this vertical should also start getting revenues, is what they are saying. So, all in all, I feel it is a decent company. I would say the biggest red flag would be the 2% QIB, 2 or 5%, whatever it is. Like I would have been very happy if this company would have went with an anchor, and I felt कि anchor मिलना शायद ऐसी company को बहुत मुश्किल नहीं होता, but they couldn't get those anchor, या फिर they chose to not, whatever. Like I don't know that scenario or situation in which they had. Maybe it was just the due to the bad primary market conditions as such. Yes, markets have improved, but primary markets continue to stay dull. So maybe due to that reason, they might have reduced that or not took that anchor portion off. But I feel this is not a right justification to it. So I feel it is a decent company, not a bad company, but not even a company which you can bet directly, because there is no Q anchor. So I would currently treat this company as a neutral, not applying, or not even an avoid, or also a strong apply, at least on the listing or short term, maybe in medium to long term. I believe it should do well, because FY27 should be big for this company due to that UP project. So I want, like, it is a neutral from my end. For short term, it is a skip. For long term, we can explore post the results are out, and or it is slightly below the issue price or whatever it is. So I'm not sure about the short term scenario, but it seems a neutral for me.
Thanks, Tanmay. We had also evaluated the company and found it pretty interesting, but then there was no anchor, etc. So I find the space interesting, very like up and coming space. We see IPOs, maybe just IRPRs have been increasing very fast. Service companies are doing more and more con calls, etc. So I like the space. Valuation भी ठीक है company की, but the liquidity, as Tanmay mentioned, is a big concern. कि anchor नहीं है, पूरी float is on day one, and there are better options. So because of which I would probably skip this one. But it's an interesting company to study. हमने कंपनी का इंटरव्यू भी किया है. You can go through the interview. It's in the pinned comments. With that, maybe I'll move forward to the second company. The second company we'll cover is Recode Studios. Setting it up, incorporated in 2021. Company is an Indian BPC, beauty and personal care company, operating under the brand Recode. It is omni-channel with both online and offline presence. We'll understand it in terms of the IPO. It's a 45 crore IPO, out of which 40 crore fresh है, 5 crore का OFS है. Market cap 168 crore पे आ रही है company. तो 25-26% का डायल्यूशन है. एंड ओएफएस है तो प्रोबेबली सचिन विल नॉट लाइक द कंपनी, बट विल सी. FY25 फाइनेंशियल्स की बात करूं तो 48 करोड़ का टॉप लाइन है, 3.3 करोड़ का बॉटम लाइन है. बट अगेन FY26 का फाइनेंशियल्स पे देखना चाहिए. लाइक 9 months में कुछ उन्होंने 9 करोड़ पे ऐड किया है, सो expected to close or higher. But we'll understand the financials. In terms of the LM is Serene Capital. So with that, over to you, Sachin, to talk about Recode.
Am I audible?
Yeah.
All right. So this Recode Studios, as their name has now come up. Earlier they were called Lush Looks between 2018 to 2022, and finally they transitioned to this current brand of Recode Studios by FY23. So what they do simply is they are a makeup brand. So they make products for females primarily, be it foundations, primers, lipsticks, eyeliners, other face makeup products. And they say that we have around 350 plus SKUs in their kitty. And what they are saying is that they are not manufacturing all of these products, so they are going asset light, and they have sourced all of their manufacturers and suppliers from various locations. Some local manufacturers, then there is manufacturing from Taiwan, China, some players from Taiwan, China. And why they are doing specifically is because they are trying to say that we are competing with those top brands in beauty segment and makeup segment, like Smashbox, NARS, Huda Beauty, and all of these top brands get their products made from these suppliers, so they are replicating the same. But how they are making and differentiating from these players is that they are selling less at a price lesser than these international brands, around 4 to 5 times. So let's say a top brand sells a foundation for 5,000 to 6,000 rupees. So Recode is trying to sell it for 1,500 rupees. And they are also saying that we are not in competition with the likes of giant players like Nykaa, Mamaearth, etc. So those are completely different players than this Recode. And what they are saying that we are targeting customers that want this international type of products, but at maybe Indian prices or domestic prices. That is their premise for their current business. Around 45% of their revenues come from online website, their own website, and this online marketplaces like Amazon, Nykaa, Myntra, etc. 30% is from distributors and makeup artists, etc. And the rest 24 to 25% comes from their own stores across the country. Around 22, 23 stores they have. So the rest revenue comes from that. So what they are doing for that customer acquisition is they are saying we do not usually market or advertise on these platforms like Facebook, Google, or influencer, etc. They are going it on going it on a different way, that they are targeting makeup academies, beauty schools ho gaye, salons ho gaye. So they are targeting all of these. Then they host seminars and they give free demos and free samples to all of these academies and beauty schools, etc. एंड वहां से ही उनके प्रोडक्ट्स का एडवर्टीजमेंट हो जाता है. सो वेन एवर दिस मेकअप आर्टिस्ट और ये सब जब कस्टमर से डील करते तो दे रिकमेंड Recode. So that is their customer acquisition strategy. And this is very similar to how doctors prescribe medicines, or wo jo drugs doctors prescribe. So that model is very similar to how Recode is currently operating. And this is actually working. If we see that for almost 1 rupees of advertisement spend that they are doing, they are generating almost close to 4.5 to 5 rupees. So 5 times they are generating on their advertisement spend. And customer is also with them around 40 to 45% is that their customer retention is etc. Now coming to the numbers, from FY23 to FY24, 5 they have grown from 22 CR to 48 CR, and in the 9 months for FY26 they have already done 57 CR. North and east part of the country has been prime contributors. They are slowly venturing into south as well, but they don't have a physical presence for now in that region, so that is under penetrated for them. Margins have also increased. They are boasting from 6.5 to 7% in FY23. They have come heavily. They have actually doubled and more than doubled to around 23% EBITDA in this FY26. And the larger peers, if we just for context, if we say that Mamaearth, Nykaa, etc., they operate around 6 to 7% of EBITDA margins. And Well Care is also one player that came in for this in SME only. They came in, so that also operates at similar margin or EBITDA margin of 27 to 30%. In the 9 months, they have already done 9 CR of PAT, and they are also cash positive. So everything is working for now for Recode. Now coming to the IPO details, around 5 CR is offer for sale, which is around 11 to 12% of the total issue. 3 of their primary promoter group are selling it. Rest 39 CR is fresh issue, where they are using around 20 CR for working capital, and around 6 CR is for setting up one warehouse in Ludhiana. So Ludhiana ke warehouse se they will support all of their channels, be it franchisee stores or be it this online marketplace etc. So वहां से वो लुधियाना के store से ही वो serve करेंगे. One thing to note is here that they already have one land parcel in Ludhiana, but they are saying that we are not using that land parcel and we are buying another land parcel from these IPO proceeds and then constructing their warehouse in that and then operating for that. They are saying that क्योंकि वो land parcel जो हमारे पास already existing है वो suitable नहीं है for construction of warehouse and other things. So for that reason they are not using that land parcel. And the rest 5.5 CR is for market and advertisement. One good point here is that they have hired care ratings voluntarily to monitor IPO proceeds. It was not mandated because unka issue size is not breaching that threshold, but they have hired them voluntarily. Now some risks that I see that their working capital for which they are using around 40 CR. That is primarily for the reason that they are entering more into modern trade or ये dark stores etc. का ये करने जा रहे हैं. So they are entering into that. But this is the first time for them to enter into that. So margin pay, I think there will be some pressure on the margins currently. So that needs to be seen how it pans in FY27 and beyond. Also they are saying that they generally avoid Blinkit, Zepto, Instamart, etc. Because यहाँ पे कुछ margin issues हो जाते हैं तो they are generally avoiding these players. Also I see that around 70 to 72% of the revenues is from their face makeup only. So वो एक उनका dependence बनता जा रहा है on this product. So this was around 19 to 20% around 2 to 3 years back, but now it has slowly grown to 70%. The rival care player which came into SME, that also had only one segment that hit, that hair care segment, but उनके भी different segments hit नहीं हो पाए. तो let's see if Recode can decode other segments as well. Now coming to the pricing, if we just annualize these 9 months for FY26, the PE comes to around 14 to 15 times, and they are priced near 2 to 3 times price to sales. The Mainboard pairs like Mamaearth, Nykaa, etc., they trade around 4 to 8 or in 8 to 9 times price to sales, and Travel Care, which is into SME and it is into some influence of other factors as well, that trades near 25 times price to earnings ratio. So that is with the comparison. So the valuation looks decent. Now similar to Travel Care, this Recode also featured on Shark Tank, but they did not get the funding from these Shark Tank sharks, primarily because there was conflict of interest with their judge panel, Vinita Singh, for their vertical of sugar cosmetics. So वहां से उनको funding मिली नहीं, and Sony somehow deleted their episode as well for this Shark Tank, which is now back again on YouTube, etc. But this controversially, जो भी है मतलब controversy हुई, that generally got more brand visibility for Recode. So that already helped them to come to the current scale. Lead manager here is Serin. So they have a decent record for now. FY25 में भी ठीक था, FY26 में भी decent ही है. And now anchor list is yet to arrive, so let's see. But the GMP is already high, around 40% I think I saw last time. So GMP is already there, so subscription में कोई issue आना नहीं चाहिए. So for now I think it's good to apply on a personal level.
Thanks, Sachin. Yeah, interesting company, BPC segment. Valuation wise looks good because 14 times PRE or Ravel is probably the nearest peer at 20 times, and Ravel, if anything, is slightly weaker peer because unka most of the reliance is from shampoo customized products versus
Right.
this. But again, like this is an industry which is like it is very difficult, I feel, to predict margins for the future simply because like Revel, they'll also be getting into like Revel was getting into online. They at least do online. Now they'll be getting into offline stores, etc. Right? So margins, it is difficult to predict for the future. But again, at least at IPO price, this seems like a apply. Uh, so I would probably be applying to this issue along with the next company we'll be talking about. But yeah, with that, maybe we'll close this company. Recode and move to the third company. The third company we'll be chatting about is REIT. REITs and InvITs have essentially been in focus simply because they have done very well over the last 2-3 weeks, where two InvITs came. First Rajmark, then CTS. The third REIT. This is a REIT, not an InvIT. The REIT which is coming is a Bagmane Prime Office REIT. Setting it up, the company is a Bangalore office real estate investment trust focused on owning and managing premium grade A plus business parks in Bangalore. Pretty famous in Bangalore. Bagmane, IT parks, etc. are known very, very well. Amazon office is here. They just signed a deal with Nvidia. So this should probably be one of the top A plus builders in India and should be a fancy REIT setting it up. It's a 3,400 crore issue, out of which 2,400 is fresh and 1,000 crore is a OFS. FY25 फाइनेंशियल्स की बात करूं तो अराउंड 7,200 crores का रेवेन्यू था इनका पिछले साल एंड 900 crores का पैट था. So the distribution will essentially come from this 900 crores. In terms of the LM is JM, Kotak, IAFL, SBI, Axis 361 and HDFC. So with that, over to you, Rohit, to talk about Bagmane Prime Office REIT.
Thanks, Manish. I'll explain this. I'm sure will be interesting for a few people. This was quite new to me also. I've never studied a REIT. I guess InvIT also is a category we studied recently. Now REITs are here. Especially in these kind of volatile markets, investors often look for assets that can be yield generating, some kind of fixed income generating. And I think it's a great time for this Bagmane also to come. And generally, if you look at the last year, a lot of the REITs that are listed have done very well. The capital appreciation itself has been very good. When the rest of the market was down, these REITs have actually done very well. So I'll cover what a REIT is initially. I'll just spend a couple of minutes on that and then jump into Bagmane and how to evaluate this. And we also have some information from the Bagmane guys directly to get a sense on their the dividend yields and stuff like that. So at least all of that can be put into math and you can decide whether this is something you want to invest in for listing gain or for the long term, etc. So starting with what is a REIT, it is a real estate investment trust. It's a trust much like a mutual fund is a trust. So it pools people's money. You then the REIT takes that money. It buys commercial real estate. It could be an office park. It could be a tech park. It could be a mall, for example. So one of the listed REITs, Nexus, owns a lot of malls in all over Bangalore. So depending on the underlying asset, these REITs purchase those kinds of properties based on the strategy of the REIT. Then the company would rent those buildings out. That rent then comes back to you as income, and it is mandated that a certain percentage of that income. So let's say the REIT is generating 100 rupees of income. You take out all the costs. Maybe there's another 20-25 rupees of cost, typically, even lesser, probably around 10 rupees of cost. The rest of it will be the operating income or the EBITDA equivalent. Then there'll be some amount of interest and depreciation, whatever, you remove that, you'll be left with some cash flow. Typically, that cash flow will be about 70% of the revenue. 65 odd percent of the revenue will be this NDCF, which is the net distributable cash flow. That cash flow is mandated to come back to the investors of the REIT, and that or up to 90% of that money, anywhere from 90 to 100% of that money has to come back to you, which means that this is going to pay you regular dividends, every quarter, every half yearly, every quarter, depends on the REIT, but most REITs do it in a quarterly basis. Uh, so there are currently 5 listed REITs, 4 are office REITs, which is, similar to what Bagmane is, and one is Nexus, which is a REIT that is more into this commercial space, like malls and stuff like that. But there are 4 listed REITs that do something very similar to what Bagmane does, which is more on the office space. Now, as I was saying, you get a yield. So a REIT generates value in 2 ways. You get the yield. So let's say you've bought the REIT for 100 rupees, and they give say typically somewhere between 5 to 7% will be the distribution that they give you, the NDCF, the amount that comes back to you every year will be somewhere between 5 to 7%. Let's say on an average, most of the REITs today operate in that 5 to 6%, 5.1, 5.4, 5. It's all in that range. So that amount comes to you every month, every quarter, and adds up to say 5, 6%. And then you're also hoping for some capital appreciation. So today that REIT price is 100 rupees. Let's say that rent of 6%. Next year, because of all the escalations, whatever clauses they have, there'll be some mark to market difference in the rent that they're doing today versus say the rent in that area. And when an old lease ends and they start a new lease with somebody else, they get that, appreciation. So all of that causes the rent and therefore the revenue to go up. And that increases the value of the underlying REIT itself. So if today you're getting 6 rupees on 100 rupees, there's 100 rupees worth of real estate asset and you get a 6% rental yield. Next year, that might be 7% because of all of these various factors. Now, generally what happens is the market will not let that yield sit at 7% or 8% or 9% because the higher that is, the more attractive it is. And then the price of the REIT itself will go up. That 100 will go to 105, will go to 107. So generally what happens is you will see a 6-7% kind of distribution yield, and you'll probably get a 5%-ish kind of appreciation, which is generally linked to the rentals that are, all of these rates, they'll have this 5% escalation clause or 15% every 3 years. So you'll kind of get the sum of these two, which gives you a 12%-ish kind of return over a long time frame. Now, of course, in a short time frame, that can fluctuate quite a lot. But over a long time frame, generally the expectation is that you can get about a 12% return, all said and done. So that is the basic funda about a REIT. The other small part I'll just mention quickly is that there is also a tax angle here. So the dividend that you get from the REIT, a part of that dividend is tax free, depending on whether it comes under a dividend category or an interest category. And there's a lot of specificity, but broadly, because you're getting some interest fee component in your yield, plus you're getting some capital gains on the underlying asset itself. Overall, a REIT is quite tax efficient. You probably will pay a 15-18% kind of tax on a blended level, maybe slightly less than that as well. So that is the basic of a REIT. Now, before I jump into Bagmane, generally there are 4 things you look at in a REIT. You look at the occupancy, you look at the rent growth. All of this information is there in the RHP, by the way. You look at the type of tenants, which I'll cover. All of these I'll cover for Bagmane. You look at the general balance sheet. You look at their future, growth pipeline, and can that rent kind of keep growing because they have new assets. So if I come to Bagmane specifically, they are a pure play Bangalore office REIT. They focus on the outer ring road and certain central business district micro markets. They have about 6 buildings or 6 office parks in Bangalore. And Bangalore is largely considered the best office market in India. It has the strongest absorption, even post-COVID, it rebounded the fastest. In today's data, it is the strongest office market by most metrics. There, of course, comes with a concentration risk in that every single Bagmane property that is in this REIT is currently in Bangalore. So if you want a slightly more diversified play, Bagmane is not the answer. But at least you're playing it with the best city in terms of office space. So they have very, very good. If you just look at the basic numbers, they have about a 20 million square foot portfolio, which is probably middle compared to the other 3, 4 REITs, but the other REITs might have 30 million, 40 million. So it's not very off. They have about a 98% occupancy, which is a very important factor. So they consistently have the best occupancy among peers. Most of the other REITs have between 90 to 94% occupancy. So this is consistently the best operationally. They have about, I think, 2,700 crore of net operating income, which translates to about a 2,000 crore per year kind of NDCF, and the importance of that I'll come to. They have, I think, 40, almost 2x more pipeline of assets that they can incorporate into the REIT, because their sponsor entity, which is Bagmane, is a very large, reputed builder in Bangalore, which has a lot of other properties that are not in this REIT. That's not part of the REIT. So for them to grow the REIT inorganically through acquisitions, they have this right of first refusal for some of the other Bagmane properties that can help them grow and sort of grow that capital appreciation part as well. Now, in terms of the yield that you will get now, so this, like roughly the math is this: they have about a 2,100 crore of distributable cash flow. They have a market cap of around 34,000 crore. So roughly you are getting a 6%, 5.8% yield today at the issue price. So if the issue price is 100 rupees, you were to get in at the issue price and hold it for 1 year, you will make 6% simply on the yield, leaving aside any capital appreciation. That number is fairly attractive compared to some of these other. Today, if you look at the other REITs, they're at about 5.1, 5.4. There's one which is 4.9. So it is slightly better than the rest. So even if hypothetically this were to list 5% up, your 5.8 would become 5.6, 5.55 or something. So it would still be better than almost any other property. The REITs typically trade at a discount or around the asset value of the properties that they're holding. So let's say Bagmane asset value all put together, I think, is around 37,000 crores, something like that. So this REIT is coming at a 9% discount to the asset value. Most of the other REITs trade at 3 to 4%, because except for Brookfield, which I'll again come to later, except for Brookfield, most of these others trade at between 1 to 3% discount to their NAV. So even if you take that, you can imagine that there is a 5%, 6% kind of upside just on the NAV side compared to Bagmane versus some of the other REITs. Now, what are things? Okay, so there are a lot of things that are good about this, but there are a couple of okay, I'll add one more thing that is very, very good about Bagmane is the quality of their tenants. So about 99% of their tenants are MNCs. Again, this is a very important sub-factor, but about 99% are MNCs. 90% is GCCs, which is again a segment that is very high growth. It is, I think, the highest among all the other listed REITs. About 67% is Fortune 500. And I think only about 17% is SCZ exposure. So if you look at the worst performing REIT in the last of the four listed REITs, the worst performing is Brookfield, because they have the highest exposure to SEZ. SEZ means two things. One is there's very little flexibility because there are a lot of rules from an SEZ standpoint. And SEZs tend to have very high IT exposure. So for these two factors, you can see that Brookfield has actually done the worst and it has the highest SEZ exposure, while Bagmane actually has the lowest, second lowest or lowest, depending on what time you look at, of SEZ exposure as well. So if you look at the general tenant profile, I would say it is A+. I've mentioned about the Bangalore tailwind, the fact that it is focused in this city, which of course there is a small risk there. So the fact that it's a one city rate is what I think might end up giving this a small discount. All the other big REITs here have at least 3 cities, if not more. So you are then only playing a single micro market, which is just the city of Bangalore. And so there's a chance that that one thing might lead to a discount. Now, finally, what should you do? So I looked at all the REITs that have listed so far, 4 of them. If you leave aside Nexus, the 4 office REITs listed, all of them listed positive. They listed between 2% to 9%. The best was, I think, was in Mindspace, I think, which listed like at 9% up. Embassy and Knowledge Reality listed around 3%. And all of them within the day itself, they gave anywhere from 5 to 6%. This was on listing day. This was whenever they listed. The only exception was Brookfield, which has been the worst performing and it continues to be the worst performing over a very long time frame. But I think the reasons for Brookfield's underperformance are not relevant for Bagmane. If you put all of this together, my expectation is that you should get a 5% kind of listing gain. Intraday, you might get a 6-7% kind of move as well. At that point, the yield goes from 5.8% to maybe 5.3, 5.4, 5.5%, which is still attractive. The underlying asset, now, let's say you are buying this for a 2-year or a 3-year view. A lot of the incremental yield that you might get, which is, let's say you're happy with a 6% income or distribution yield, but you also want some capital appreciation. That will depend a lot on the market. It depends on the rate cycles. It depends, of course, on the execution of this business as well, but depends on that a lot of macro factors. Suddenly REITs, will get some boost because government will allow them, mutual funds to buy more or whatever. They'll do something and then that can sort of increase the demand for it. But I think it's virtually impossible to predict what the expected yield will be 2 or 3 years out. So I'll just explain a simple math and then I'll wrap this up. Today, the price is at 100 rupees and you're expecting a 6% yield. And let's say that 6% yield continues, the yield grows by 5-7%, whatever it is that you would expect over the next 2-3 years. And 3 years out, let's say the investor at that point is expecting a 6% yield from the REIT as well. If that is the case, the underlying asset price of the, the 100 rupees today will be close to 120 or so, or 125 or so, if I'm not mistaken. Which means that a lot of the value is determined by what yield the market is willing to take 3 years out. If that is not 6%, but if that is 7%, that 100 will be at 100. So it is, even if you're holding it for long enough, I think in general, historically, all of the listed REITs in India have given a 12% kind of return. So if you're looking at it, with a very long time frame, it is a very interesting instrument. But in a 2-year, 3-year time frame, there are too many things that will vary. So I don't want to say too much on what this price will be 1 month or 3 months or 12 months or even 2 years down the line. I feel we are safe for a decent listing gain because that initial kind of yield of 5.8% is better than what others are giving. And I think there is a 5% kind of pop that you can get just on that. Maybe 5, maybe even up to 7%. And then in the long term, the market will determine what yield people are willing. Because at that point in time, maybe all the rates people will be expecting a 7% yield, in which case this price will not go up for 3 years. So that is the background. But yeah, historically, yields have done very well. REITs have done very well over the last several years. There was a bad period post-COVID, as you would expect. But apart from that, REITs have consistently done well. So my sense is there is a 5 to 7% kind of gain on listing / immediately after listing.
Thanks, Rohit. It's an interesting product. REITs are interesting product because if you don't have real estate in your portfolio, it's a good way to diversify into real estate without actually getting to manage all the hassle of having physical real estate. So, should be definitely looked at. This is one next week's IPO, which would be very interesting. And one thing which I want to highlight is that unlike IPO where allotment is via lottery, here allotment is via proportionate basis. So the more amount that you put in, the higher you get allocation. So I have already decided that this is where most of my money is going towards. I would want to hold on to some of this allotment as well. And I was looking at, like Rohit was mentioning, rates, etc., interest rates, etc., are difficult to predict. But again, this can be looked at as a way of diversification and not really as a way of in like equity investment. So it would not be wise to compare the returns of a REIT to equity returns, but this is a good way to kind of diversify yourself and probably get 10-12% a year. And if nothing works out, then at least you can get some listing gains on day one. But yeah, these are more stable products. So let's see.
Yeah, I think you're basically looking at this as an alternative to your FD. So your FD gives you, let's say, 6% today, 6.5%, something like that. You're getting that much just from the distribution yield. So anything you get on the capital appreciation is upside, right? So if you have a certain amount in fixed income instruments, let's say 20%, 30% of your portfolios in that, you can probably remove some of that and move that to, change that allocation and move some of it to a REIT, which will also give you the same distribution, but give you some upside, hopefully, without really much downside.
Yep. But again, most of these products are like REIT is also market linked. So keep that in mind. Everything has different risks. So make sure that you go through the risk profile of everything and then take a decision. As we have mentioned, we are not SEBI registered. None of the opinion that we are mentioning is qualified opinion. One question that I have, Rohit, here is what is a strategic investor? Did you see that there is a strategic investor in Bagmane? I think there was some pre-IPO which they would have called
Yes.
strategic investor, but
It's a
anything.
pre-IPO. It's a pre-IPO they did with a bunch of family offices, a few funds, some 360. I don't remember now. I don't remember the names of the top of my head, but there were some funds and HNIs, family offices and stuff who cannot participate in Anchor because they are not QIBs, right? So you're not an institution, so you can't participate in Anchor. So they took some amount, I think 4,000 crore, maybe 650 crore or so they took using this pre-IPO, and the remaining 3,400 is being offered to the public.
Got it. Makes sense. With that, we'll move forward. We'll talk about one last company. Yeah, one very interesting thing as well. This REIT has the lowest leverage. I think just 7% was what their debt levels were, which was lower compared to the other REITs. So that's also interesting. Seems a lot of good things for this REIT going, but yeah, let's see. The return expectations should always be very moderate with REITs and InvITs. With that, we'll talk about one last company. It's a proper IPO. It's called One EMI Technology Solutions, or Kissht as we kind of colloquially know it in terms of like app, etc. that we use. Setting it up, incorporated in 2016, company is a technology-enabled lender in India, primarily offering digital loans through its mobile application and operates under the brand name Kissht for digital lending platform and Ring for its payments app. Setting up the IPO, it's a 926 crore IPO, out of which 850 crores fresh issue है, 76 crores का OFS है. मार्केट कैप जिसपे कंपनी आ रही है वो 2881 करोड़ 2800 करोड़ टाइप की वैल्यूएशन पे आ रही है. सो दे आर डाइल्यूटिंग लाइक क्लोज टू वन थर्ड ऑफ द कंपनी विच इज higher than the lowest number needed as such. So they are diluting close to one third of the company. Sorry, FY25 financials की बात करूँ तो 1350 crores का revenue and 160 crores का PAT है. Although should not look at it as a P level. PB would be a better metric to evaluate this company. One question which I would have for Tanmay when he is evaluating it, how do you, like, which peer do you look at it? Do you look at more established peers like HDFC, or do you look at peers like Muthoot Microfinance when you look at it as peers? But in terms of the LM is JM, HSBC, SBI Caps, Nuvama and Centrum. So with that, over to Tanmay to talk about Kissht.
Is my voice clear? So,
Yeah.
I've tried to cover this. I'll be trying to cover this IPO in a pretty much depth, and I would be hoping that the retail investors understands three new concepts in the space today, at least. So, Onyema Technology Solutions Limited is a digital lending platform which operates under the brand of Kissht. So, Kissht is a mobile app which has got about 6.4 crore registered users, out of which 1.1 crore unique users have already used the platform for getting digital loans. These are all unique platforms, and it includes the past loans as well as the active customers. The company primarily offers digital loans through its mobile application. They focus on the urban population and in the mass market. So 63.4% of their customers comes from India's top 50 cities, and about, I would say, 67.7% customers have a monthly income between 25 to 75,000. So ये जो loans होते हैं ना, इनका एक average ticket अगर मुझे बताना है, that is about a 31,000 kind of a thing. मतलब this company is basically targeting the income levels of 25 to 75,000 a month. So 70% of their users have this similar monthly income between 25 to 75. They are giving those loans for basically two things. First is the consumption loans, and second would be working capital loans for the businesses. The average age of their customer is 32. So about they're targeting a very, very young kind of a population. Not the company currently has an AUM of about 6,000 crores. Now, so this is all the basic information. I'll be coming on the business models. The company has got two verticals through which it lends. First is obviously the captive NBFC 100% whole loan subsidiary called as C-Creva. So C-Creva इनका एक 100% subsidiary which is an NBFC जिसके through ये lend करता है. And what about the rest 50% is they have off-book arrangements. Now, what does off-book arrangement means? And this you should know, focusing upon due to the contingent liabilities जो books पे इनको 1800 करोड़ दिख रहे हैं, everyone bit चित्तौड़गढ़ bit WhatsApp और bit Twitter हल्ला बुल्ला हो रहा है कि what is 1800 crores का contingent liability for a 2800 crore market cap company. So I'll be coming on that at a later point, but first you should know about the second part of the business. So this model का जो ऊपर का नाम है that is called as off-book arrangement, which is in a lending term called as FLDG. Okay, so FLDG का full form है First Loss Default Guarantee. So basically what they do is, let's say there is a loan which they are servicing, and they take the money through a different fintech bank or NBFC which is not their own, so which is not C-Craven. There's some another lender who is putting that loan, and for that transaction the parent company of Kissht gives a corporate guarantee. So these guys currently have 46 lenders, which includes banks, NBFCs, fintech players, for servicing those loans. And this might look new, but in a digital lending, this is actually a very, very normal concept. As we see the IPOs of Moneyview coming in, Five coming in, the same concept is going to get repeated multiple times. So what I can say, the breakup between the captive NBFC servicing the loans and the off-book arrangements have moved, massive, tremendously from FY23 to about FY25. So I'll be giving that numbers also. So earlier, the number used to be 35-65. So 35% loans they used to give through their captive NBFC, and the rest 65 used to be through the off-book arrangements. So that split has came to 51-49 in the first 9 months. So about 51% of the loans given are through the captive NBFC C-Creva, and the rest 49% is through the off-book arrangements. Now, coming on the collection efficiency, 97% collection efficiency, in the 30 TPD. So what is 30 TPD? It is basically 30 days, post the claim of the amount of interest. So now, like, there is a one very important point to be mentioned is इनका जो NPA level है, that used to be about a 0.2, 0.3%, 0.1% in FY23. That has went to 2.9%. And in net NPA used to be 0.01%, which has went to about 0.24%, if I'm not wrong. So why has this happened? So there were a lot of concerns regarding the asset quality, but there is actually a very small, I would say not small, but a significant accounting change which has been done. So earlier they used to record NPA as it used to cross 90 days, 90 TPD. मतलब they were very conservative earlier कि यार 90 दिन हो जाए, उसके बाद फिर हम इसको NPA treat करेंगे. And so that used to happen due to two different things. First, इससे books बड़ी clean रहा करती थी. दूसरा, asset quality virtually used to look very great. And third, मतलब उससे आपका सब कुछ over control लगता था, which used to be the most best among the industry, among listed plus unlisted players. अभी ये जो करंट आपको NPA दिख रहा है ना 2.9, this is actually 30 TPD. तो ये FY23 तक that number used to be 90 TPD, now it is 30 TPD. So for this small change, it is not actually small, but virtually it looks a small change. The numbers have went from like about 0.2 to 2.7%. So if you just look at their NNPS, this looks about 0.2, 0.3%, which should actually be 0.05%, and the 90 TPD on FY25 basis. तो so this is the second thing I'm saying you कि यार ये जो asset quality को लेके इनका बहुत ज्यादा there have been noise all over. So this is what has led to this high NPA, which is just an virtual accounting adjustment. अभी इनका अगर एक ये देखना है कि there was a concern regarding the unsecured versus secured portfolio. So the company started in 2016, with a view of this digital lending through with a small ticket size in the unsecured part. So currently the company has got about 93% odd from the unsecured portfolio and about 7% odd from the secured portfolio. So these guys started the secured lending from about 18 to 20 months back. So they had a AUM of 2.7% in FY25 through secured, and currently in first 9 months that has went ended up to about, I would say, 5.5 to 6%, which should go to 7% in the full year, kind of a number. So that actually has rose quite a lot, but still, the split looks quite absurd towards, skewing towards the अनसिक्योर्ड बुक. सो यार इसका एक और कॉमन सेंस ये भी बोलता है ना कि यार आप 30,000 के लोन के लिए क्या आप सिक्योर हाइपोथेटिकेशन रखोगे. लेट्स से ही वांट्स अ स्मॉल पर्सनल, उसको एसी खरीदना है घर पर, वो कहाँ से क्या सिक्योरिटी देगा वो 20-30,000 रुपए के लिए. सो एक्चुअली करंटली द डायनामिक्स इज सच, even in microfinance, lending in a secured manner is also actually quite dangerous than lending a small amount in an unsecured way. If you just look at the last 2 years kind of a trends with this unsecured guys, especially on the microfinance level. तो इसका अगर मुझे आईपीओ का बताना है तो 926 crores किश्त इज रेजिंग, आउट ऑफ विच 850 odd crores इज अ फ्रेश इशू, 76 crore अबाउट ओएफएस है. 850 में से दो ब्रेकअप है. एक तो 637.5 crores is towards augmenting the capital base of the captive NBFC 100% wholly owned subsidiary called as Sikreva, and the rest about 212.5 crore would be GCP, which would include the issue expenses, थोड़ा AI में डाल रहा है, थोड़ा ऑटो एमएल में डाल रहा है, और थोड़ा बहुत एसेट क्वालिटी को बेटर करने के लिए, कैपिटल बेस को और एक्सपांड करने के लिए रखा गया है. 76 crore odd is the OFS, which is, I would say, pretty small, and doesn't require much kind of an explanation. Talking on the AUM, FY23, the AUM was about 1267 crores, 1267 crores. It has went up to 4087 crores in FY25, and first 9 months it has went up to about 5956 crores. So about 70 से 75% का केगर है between FY23 to FY26, which is actually very remarkable. ऑन दी वो मैंने आपको ऑफ बुक और कैप्टिव का स्प्लिट दे चुका हूं मैं. अर्लियर इट वाज 35-65, नाउ दैट हैज वेंट टू 51-49. इट इज क्वाइट ग्रेट, क्योंकि ऑन बुक इज ऑलवेज स्लाइटली बेटर यील्डिंग प्रोडक्ट देन दी ऑफ बुक, बिकॉज ऑफ बुक वाला भी पहले तो आपको कॉर्पोरेट गारंटी देनी है उसकी. आई विल कम ऑन दैट पॉइंट वेरी सून, स्पेसिफिकली ऑन द कॉर्पोरेट गारंटी पार्ट. एंड ये जो आपका दूसरा है कि दैट ऑलवेज हैज गॉट अ हायर yield. These guys will also look to make higher yield. तो जो बीच का जो arbitrage होता है between giving that particular loan portfolio to a off book player and to the captive NBFC, बीच में कुछ percentage होता है which is actually their gains. So that is leading to the company thinking about scaling their captive NBFC and increasing their NIBs. 73% of their AUM is from repeat customers. Actually quite good number. मतलब generally अपन ये digital lending में नहीं देखते that the same customer is repeating the loans, and 73% actually quite a good number. Ticket size about 30,000 का average है. If I just want to average up for 3 years, it should be about 29,700 something. Provision covering ratio PCR is about, I would say, 91.5%, which used to be 100% about FY23, and now it is 90 to 192. Still, it is a great one. कोई दिक्कत नहीं. ROA is about 8.5% for the first 9 months. ROE is about 23.5% for first 9 months, which is quite a good number. Now coming to the contingent liabilities, इसके बुक्स पे 1793 crore का contingent liability, which has been the biggest risk as far as I know about this company, which has been popularly discussed. अगर आपको इसका ब्रेकअप दूं ना, 1793 में से 1734 crore तो खाली कॉर्पोरेट गारंटीज है towards the parent entity for the ऑफ बुक अरेंजमेंट्स, FLDG का जो कॉर्पोरेट गारंटी होता है. सो दिस इज एक्चुअली RBI मैंडेटेड थिंग. जो लेट्स से 100 करोड़ का बुक, एग्जांपल दे रहा हूं मैं, ऐसे 100 करोड़ का बुक है आपका टोटल, उसमें से आपने 50 दिया है, FLDG वालों को 50 रखा है खुद फ्रॉम देयर कैपिटल एनबीएफसी सीकरेवा. 50 के ऊपर मेरे को 5% का कॉर्पोरेट गारंटी देना है. क्या अगर इफ देयर इज काइंड ऑफ एनी काइंड ऑफ अ डिफॉल्ट फ्रॉम द कस्टमर विच किस्ट हैज सोर्स्ड, वो पूरे ट्रांजैक्शन का 5%, नाउ इट इज ऑन द होल अमाउंट और द प्रिंसिपल, और इट इज प्रिंसिपल फॉर इंटरेस्ट, दैट डिपेंड्स ऑन ट्रांजैक्शन टू ट्रांजैक्शन. और फिर उसमें भी कुछ रूल्स है बहुत सारे. सो 5% ऑफ दैट अमाउंट वुड बी पेड बाय किस्ट, एंड रेस्ट 95% वुड बी देन ट्रीटेड एज एनपीआर. उसके बाद फिर उसका जो भी चीज रहेगा वो देखा जाएगा. सो जो 5% है फ्रॉम दैट ऑफ बुक अरेंजमेंट इज द कॉर्पोरेट गारंटी, विच इज अ वेरी वेरी नॉर्मल इंडस्ट्री फिनोमिना. इसमें कुछ भी नया नहीं है. बट एज दिस इज द फर्स्ट कंपनी फ्रॉम द डिजिटल स्पेस गोइंग पब्लिक इन द कैपिटल मार्केट्स, अपने लिए नया है, एटलीस्ट फॉर द रिटेलर्स एज सच. सो दिस इज नथिंग काइंड ऑफ अ वरी. अभी इसके बाद 44 करोड़ का है कॉर्पोरेट गारंटी परसुएंट टू बिजनेस करस्पॉन्डेंस अरेंजमेंट. तो अगर 1734 प्लस 1444 इज 1777. ये तो खाली कॉर्पोरेट गारंटी. बाकी की जो है 18 करोड़ है, उसमें से कुछ 3-4 करोड़ टैक्स का है, कुछ 1-2 करोड़ कुछ आरबीआई का है. तो दैट इज वेरी वेरी लेस. एंड उसमें भी मैंने कुछ देखा, सारे नॉमिनल ही आइटम्स है. जो आई वुड से कंसर्निंग कॉन्टिजेंट लायबिलिटी, दैट इज बियरली 10 to 15 crores, विच इज गिवन द बैलेंस शीट ऑफ द कंपनी एज गुड एज जीरो. तो ये जो पॉइंट है ना, दिमाग में से निकालो कि कॉन्टिजेंट लायबिलिटी नाम का कोई कंपनी में रिस्क है. हाँ, अगर ऐसा हो गया कि पूरी बुक की डिफॉल्ट हो गई, तो विच इज एक्चुअली नॉट गोइंग टू हैपन. यू डोंट सी वेरी स्मॉल टिकट साइज काइंड ऑफ अ लोन गोइंग इन डिफॉल्ट. उसके बाद अभी कमिंग ऑन द वैल्यूएशन पार्ट, इसका जो एनएवी फॉर फर्स्ट 9 months इज अबाउट 231.8 फर्स्ट 9 months का. अभी अगर मैं इसको FY27 का सेम आई वुड से स्टैंड अलोन नैप ग्रोथ पे और मैं नेटवर्थ में अपना 850 करोड़ का फ्रेश कैपिटल डाल लू, बायरिंग 20-30 करोड़ ऑफ इश्यू एक्सपेंस, अबाउट 2600 करोड़ का नेटवर्थ निकल के आता है जस्ट ऑन दी 30% AUM ग्रोथ. आई एम नॉट सेइंग मोर, से ज्यादा होगा फॉर श्योर गिवन दी न्यू कैपिटल बेस हैज गॉट एडेड. अबाउट 2600 करोड़ का नेटवर्थ आएगा. तो प्राइस टू बुक पे FY27 पोस्ट मनी इट इज कमिंग एट अबाउट 1.15 to 1.2 टाइम्स. पोस्ट मनी बोल रहा हूं मैं. एंड FY26 पे प्री मनी आ रहा है अबाउट 1.5 to 1.54 टाइम्स, अबाउट 1.5 पकड़ लो राउंड फिगर. तो इट इज एक्चुअली क्वाइट अट्रैक्टिव एंड क्वाइट चीप. अगर आप मतलब बाय द वे इसका लाइक क्वेश्चन हो आज में मनीष भाई कि इसका पीयर्स आप किसको मानते हो. सो इफ यू जस्ट लुक एट द आरएसपी, इट शोज अबाउट SBI कार्ड्स, इट शोज बजाज फाइनेंस, Cholamandalam, and I guess again another 1 or 2 very large players. But I feel this is kind of a one of a kind listing and unique listing. As Money 5 gets listed, that should be their exact comparable peers. But I don't feel this company has got any peers very comparable. कोई भी peer मुझे नहीं लगता है. And now one can compare it with a microfinance player or someone, but मुझे नहीं लगता that is the right metric, because the business models are very different, the time is very different, and the what I can say, the ticket size is also quite different. तो उससे आप कंपेयर इसको नहीं कर सकते. इवन इफ आई वांट टू चेक अबाउट योर नॉर्मल NBFCs, these guys trade anything between 2.5 to about 4 times price to book on FY27 basis. 26 पे भी अबाउट आई वुड से 3 से लेके 4.5 तक के नंबर है. दिस गाइस कमिंग एट अबाउट 1.17 ish FY27, about 1.5 times FY26. Actually quite attractive. Their existing capital includes Trifecta Capital, Altair Capital, India Partners, ENDIY, not INDI. Then Sachin Tendulkar has also invested. Venture East, AION Ventures, Vertex Ventures there. So and there are another 10-15 names. There is Navi Technologies. There is Northern Capital, which has invested. There are few family offices in it. So very good cap table before the IPO. Talking on the anchor book was actually quite good given the size of the anchor book. We saw SDFC, we saw ICICI MF, we saw Sundaram MF, White Oak, Goldman Sachs, Al Mehwar, which is the affiliate, one of the from the I guess CEO of Abu Dhabi Investment Authority. उनका खुद का एक fund है. Then this is Tata MF, Quant MF, Neo Asset Management, Bandhan MF. So these are very good names. Abhi overall, I feel I've covered most of the things. I have covered your FLDG thing, which was I feel new for 90% people here. उसके बाद मैंने TPD का concept cover किया. उसके बाद आपको contingent का भी मैंने आपको बता दिया है. So I feel these 3 things have already covered, which were the main highlights of this crux of this IPO. Overall, I feel it is a very high quality company as far as I can see. There are one small risk which I saw. 2 of their KMPs had resigned last year. So like in I would say P-backed and fintech player or an NBFC, it is quite normal. But end of the day, resignation is resignation. There could be some here and there reasons. It looks normal. It is normal, but it is a small risk, which I see. Second, I would see is the promoter holding about, I mean, exactly, I guess it is about of 25% something, which is like fine with these players. मतलब उनके साथ बहुत normal है, because these guys have to dilute it left, right, and center. So it is also fine. So I feel this is actually a very blind apply for medium term. So like you listen the words very carefully. Blind apply for the medium term. Listing ends मुझे नहीं पता, but ये पक्का पैसा बना के देगा given the valuations. बहुत ही सस्ते वैल्यूएशन, मतलब 2800 करोड़ में there's nothing to lose in this company. तो लाइक आई एम क्वाइट बुलिश. लगाना है कि नहीं is a separate factor, but I would be surely looking to. So I see a play, something like an iFinance or an Omnitech or a player like Shadowfax. इनकी तरह मैं इसमें देखता हूँ कि the listing should be tapped to slightly up or slightly here and there down, and then the stock should start moving up. Is what I feel. Very high quality company. So I know one of the KMPs, I would say co-founders of the company, like way back. So very good people. And I would like to surely की invest in this company. थोड़ा बहुत मैं PPF का रखना चाहूंगा. Like quite convinced, good company, good business model, very strong growth, robust growth, solid financials, very cheap, attractive valuations, good anchor book, good management. It should do well for sure. But short term, I'm not sure. But करेगा in medium term, it should do well.
Can you hear me? Can you hear Manish?
I
Tanmay?
can hear you. I cannot hear Manish. I'm done with my all thing. Manish cannot
Yes.
hear. I
No,
guess there's some network
no,
problem.
no, I was quiet because I thought Rohit was speaking. Rohit, you can go
यार
ahead.
ऐसा नहीं यार, मैं इधर भजन नहीं पढ़ा रहा हूँ यार, थोड़ा सुनना होता है मनीष भाई, ऐसा कैसे चलेगा?
You're supposed to be the moderator. Moderate. You have one job. Okay. So I'll add one nuance, okay, to what Tanmay said. A lot of things he's saying is true, which is this is a first of its kind listing. It is not expensive, but I understand this space to some extent. I've studied this fintech space. I've worked in this space also for some time. There is a sleight of hand that happens here when you look at short tenure loans, and that is what this is, right? This guy's loan duration is like 9 months. If you look at his loan duration 2 years ago, it was like 60 days or something. It was like very small. So he was doing very small ticket, very high yield loans, which then RBI had a problem with, and they kind of limited what kind of maximum yield people could. It was done in a sort of carrot and stick approach, saying you can't go beyond a certain threshold because it starts becoming predatory. So then these guys also moved from these very short ticket loans, these 1 month, 2 month kind of loans, and moved to now they've gone towards these mid duration loans. Loans where on average will be 9 months, 12 months, 18 months kind of loans. What happens here is these guys will write off loans aggressively. So your GNPA and your NNPA will look okay. It will look like 2%, 3%, 0.5%, whatever, right? And you'll suddenly look at that NPA and it'll look a lot like your Bajaj Finances of the world, which also may be in that, low single digit kind of percentage NPA. What these guys do actually is at the end of 90 days, they will just write the whole thing off. So if you go to their P&L, you will see massive amounts of write-offs. If you see the write-offs of this company 2 years ago, that is FY24, 40% of their revenue was written off. If you see it today, it's about 25% of their revenues being written off. That does not show up in any GNPA metric, NNPA metric, because that metric is defined such a way that it is excluding write-offs. But it will show up in your P&L. And that will affect your ROA tree and your ROE tree. Now, what these guys do to offset is, let's say so if you look at their credit cost, their true credit cost is not 2%, 1% or whatever. Their true credit cost is closer to 10, 12%. 10, 12% is huge. Like if you look at most listed financial companies, if someone had 10, 12% credit cost, they would get a half price to book, just because the market is not sure about the sustainability of this. We've seen this with the microfinance cycle, where they were obviously doing well for a period, then the credit cycle went bad. All of these companies, including Kissht, in that cycle did horribly. They all struggled. You see the ROEs of these companies 3 years, 4 years ago, they have all been like single digit. Some of them were negative ROE because of how bad the cycle was. In my view, because of this and because this is all largely unsecured, I don't think the market is yet ready for a 95% unsecured book. I know these guys are doing some LAPs and stuff, but that's a small percentage. But I don't think yet the market is ready for a 95% unsecured, low ticket, low duration, high risk asset. Even though they're generating even net of those credit costs, they're generating good ROAs and ROEs. I'm not sure the market as a whole is ready for this. I still feel the market is looking for secured assets, relatively safe kind of loans. When the cycle turns, something like this might do very well because this guy will grow super fast. And when the cycle is good, he will grow fast and generate crazy ROAs, crazy ROEs. Uh, but I would leave it as this, that this is going to be insanely cyclical, this kind of business. There will be a period when it will do amazingly well, and then there'll be a long period when it will do very badly because the market will just not give it a valuation. And if you see the metrics, if you see the actual metrics, if you go to page 302, you can see the impairment on financial instruments and just look at the financial assets written off. This is the most important metric actually because that's the true credit cost. It's the cost that comes in the P&L, which finally determines the ROA, ROE. And that number is crazy high. And it will be very high because that's the nature of this business. You charge a high interest. You don't care if there's a 10, 12% credit cost because net you're still making enough money. But that's always risky. And that is why these guys are also, I mean, I've tracked this company for many years now. I know how they started, what their initial business model also was. And they have shifted from a lot of those things to try and get better and better over the last 2 years, especially. They've made a very concerted effort to go from these 1 month, 2 month loans to 9 months. They will get to 12 months, they'll get to 18 months, they'll get to 24 months average tenure over the next 2, 3 years and get into safer and safer kind of, they do an LAP or if someday they'll start doing home loans. Like if you look at a Navi, which is a direct peer, now I think 8-10% of their book is home loans, which is like a 20-year loan. So at and a completely secured loan. Having gone from the other extreme of just giving these small ticket, ultra high risk personal loans. So even this guy will do that. As it does that, growth will taper, but market will feel it's more secure. But I just think that this is super cyclical. Look at the true credit costs. True credit costs are like more than any other business except probably for microfinance businesses that are listed today. And I think the market will treat it such. I don't think microfinance has yet re-rated. There's been some improvement, but it has not yet fully re-rated. So I'm not that bullish on this. I honestly don't like this space all that much. It's a very commoditized space. There are 60, 70 personal loan companies. It's just a distribution game. So first of its kind will get some premium, and will get some interest, but it's not my kind of company, at least let me say. Especially someone with a baggage of knowing the space and understanding the space quite deeply.
Yeah, that's why I was letting you make your pointers. And I was quiet. But yeah, we have two different reviews on this one. Uh, let's see which one comes through. But yeah, that is with respect to today's space. I would probably be doing Bagmane plus some retail in Recode. That's what my strategy would be. But yeah, let's see how Kissht evolves as well. It's an interesting company. With that, we'll close today's space and we'll see how it's coming along. Let us know how you felt about today's space and then we'll see you hopefully again in next week. Thank you so much everyone for joining. Have a great day ahead.
Thank you, everyone.
Thank you.
Thank you.